TWR Tech Video.
What is up, team? Chuck with Traders War Room, and I'm back at you with another video. This is your tech video, and today we're going to talk about something I love to trade, guys. We're going to talk about the biotech and pharmaceutical industries, and I'm going to explain kind of what they are, how they're similar, how they're different, give you guys some ideas on some potential stocks to get into at the end. And basically, I love this sector because it gives you so much bang for your buck, and it's extremely risky, which also I like too because I like the aggressiveness of it. But there's so much potential in this industry, and I'm going to explain why I like this industry so much. Now, before we get into the video, hey, check out our 50% off TWR All Access. Okay, the deal ends tonight at midnight, so definitely go to the link in the description or the very first comment on the video and sign up today. Don't miss out on this because you can get trades just like this one.
CRM trade that we entered, 285, trimmed at 14, and exited full position, guys. And don't forget that time and date stamp on all alerts because we keep it legit.
And like this one,
Charge point, entered 122, out 215.
And we cover all of these.
Stocks, option, futures, Forex, crypto, and even sports betting. Full spectrum of all sorts of professional services, real-time alerts, live trading, algos, chat floors, data quant, chart bots, you name it, we got it.
So basically, quit wasting money that's not making money. Join the bulls at TWR. Come trade with me, and I'll catch you on the other side. Without further ado, let's get into the video right now.
Biotech versus pharmaceuticals, what's the difference and why should I be excited? The biotech and pharma industries are big money. For the past 10 years, we've been in a huge tech industry boom, seeing the likes of Apple, Meta, Amazon, Google, and Tesla, among others, taking the reins of kings and basically running the growth sector show. Biotech and pharma, as well as agricultural and infrastructure stocks, have taken a back seat. But since COVID, we have seen a boom in the biotech and the pharma industry. Finally, the tech boom has created the technology so that the biotech and pharma sectors can produce breakthrough discoveries faster and quicker with higher certainty. Just think of Operation Warp Speed. This was that push for a COVID vaccine. What normally would take anywhere between 5 and 10 years, maybe 3 if it had enough money pushing it, was done in just a year and a half, guys. Thanks to that tech boom over the past 10 years, that ultimately assisted the biotech and pharma boom. So now the idea of a cure for cancer, or Alzheimer's disease, or Parkinson's disease, or even diabetes are on the doorsteps. And at a minimum, the idea of better control and way of life is in the realm of possibility, even if the cures are not. So this is why you should get excited. This is why you should be in the know, and this is why you have to pay attention and look for great opportunities to make some huge money, guys. This biotech and pharma boom are what the industry call industry disruptors. So many people often conflate biotech and pharmaceutical companies and believe that the two are one and the same. Although the two have many similarities, the two are distinct from one another, and I'm going to explain why. For one, biotech and pharmaceutical companies both produce medicines. We know this, right? But the medicines made by companies in the biotech industry are derived from living organisms, while those made by pharmaceutical companies generally have a chemical basis. The coning of the term biopharm further complicates this matter, and we'll discuss that a little bit further in this presentation. The term describes companies that are utilizing both biotech and chemical sources in their medical research and development, or R&D efforts. R&D is one of those buzzwords, guys, when we're talking biotech and pharmacology. Common products such as beer and wine, laundry detergent, and anything made of plastic are all biotechnology products. Humans have employed biotechnology since ancient times to breed animals and improve their crops. Modern biotech companies comprise a sector collectively known as biotech. They generally research, develop, and produce a variety of commercial products. While most focus on either medical or agriculture applications, the biotech firms utilize living organisms to manufacture products or to solve problems. When you can do both, manufacture and solve problems, these are the booms that pay bank. The identification and sourcing of DNA have helped the industry make great leaps. Companies in this sector have developed pest-resistant crops, created biofuels like ethanol, and developed gene cloning that we've seen with the CRISP technology. Biofarm drugs have also led to major product innovations. Some of the most frequent used biotechnology medical products recently introduced include the following. So, Beeves Humira is utilized for arthritis, psoriasis, Crohn's disease, among some other ailments in the same category. Roche's Rituxan is used to slow the growth of tumors in several types of cancer. Amgen Pfizer Enbrel is used to treat several autoimmune diseases. Investors should keep in mind that biotech industry is extremely volatile and it's fast growing. The global market is expected to reach 3.8 billion by 2030 according to Grandview Research. Biotech startups have sprouted alongside computer technology companies in Silicon Valley. The aim of most is to utilize biotechnology processes and create breakthrough drugs. Again, leveraging tech to create disruptive science. Now let's talk about pharmaceuticals. An industry pharmaceutical company research, develops, and markets medicines made primarily from artificial sources. The largest companies in this sector provide stable results, but the field continues to grow with new companies appearing regularly. Some modern pharmaceutical companies have a long history, such as Bayer AG, the German company whose founder trademarked aspirin in 1899. As of 2023, the world's top pharmaceutical company is J&J, followed by Eli Lilly and Nova. Just like biotech sectors, there is also a range of pharma startups that are trying to shake up the industry. These companies often partner with major firms to get products to the market or to gain access to large markets and distribution channels. Again, this industry is big money, guys. Pharmaceutical products can take many years to process through the research and development phases before finally making it to market. Part of the lengthy R&D process includes gaining the approval of the Food and Drug Administration, or the FDA. Ever wonder why sometimes these companies jump and dump so volatile? Because of FDA approval or denial. Think about this. Biotech and pharmaceuticals are very different propositions when you consider them purely from an investor's perspective. An analyst tends to look at the amount of a firm spends as R&D as a percentage of sales in order to compare one company to another. Biotech companies generally have higher operating costs because of research and development and testing that takes years to complete. Did you ever wonder why a biotech or pharma company pushes so hard in a market yet is unprofitable? It's because of the future potential that is seen in their R&D and their potential product. Sava is a great example of this with its Alzheimer's and Parkinson's disease cure or potential cure. So the result could be historic breakthrough or utter failure. The industry may also come across roadblocks to developing new products, especially when the research or the end product is controversial. For instance, several countries have genetically modified plants and products. As such, investors are along for the ride, whether that's up or down on this particular technology. Biotech has an advantage to make up for the cost disadvantage. While pharmaceuticals generally hold exclusive rights to manufacture and distribute their drugs for 5 years, biotech can get patent protection for as much as 12 years. Major pharmaceutical companies have a steady flow of income from current products while maintaining their R&D efforts aimed at improving upon existing products or creating new ones. Hence why some of the big dogs play in both fields. They also keep a steady pipeline of new products in various stages of development. The process to develop a new drug may take up to 15 years to complete, but it keeps interest in the investor because you're going through different milestones along that process. So what is the difference between the biotech and the pharma sectors? Well, people often confuse biotech and pharmaceutical companies together. While they may seem similar, they're actually distinct from one another. Biotech companies research, develop, and market products that are generally derived from living organisms. And we talked about that earlier. The products of pharma companies tend to derive from chemicals and artificial sources. Companies in the biotechs tend to have higher operating costs, which means they can be more volatile than the stocks of pharma companies. Major names in pharma sector often provide stable results because of their long-standing histories. Some example of biotech companies are Moderna, Incyte, Nova, and Johnson & Johnson. And as we talked about earlier, some of these companies double dip in both pharma and biotech because they can get that money from steady stream of already in the process and can work on improving upon and creating new things with longer durations. Some of the largest pharmaceutical companies are Roche, Johnson & Johnson, Eli Lilly. Examples of some of these are global pharmaceutical companies, meaning that they don't just produce here in America where maybe they were founded, right? But they are now on the global scheme. They push drugs and they push the pharmaceutical companies worldwide. Because the lines are often blurred due to the type of research and development, the activities of these companies also intersect with the biotechnology sector. And that's what we talked about. Some of these double dip, but some of these partner up with other special interest groups that maybe you got a pharma company that is looking at something in this biotech industry and another company, a smaller startup, is creating that one. The bigger pharma company will be like, hey, let's work on this. We will bankroll this product and stuff like this. And when it comes out, we get the cut, or we get this, and everybody ends up rich and we save the world and all that great information stuff there. So let's wrap this up, right? So both biotech and pharmacy stocks face a costly process that can produce high profitable products, even when they're successful. And sometimes even when they're not fully successful. We saw that with BIIB, right? And their Alzheimer's drug. They shot up from like 200 almost to 400. And that wasn't even on a successful idea. It just was more successful than they thought it was, apparently. But we also have to understand that the process is extremely unpredictable, which can prove detrimental and even unrecoverable for the smaller biotech firms, which is why you see a lot of times in these sectors, you'll get a huge rush and then these start coming down based on the failures, and then they run out of business or they get bought up by a larger business and get kind of put underneath an umbrella. Pharmaceutical companies, on the other hand, are typically able to withstand setbacks and failures because they have a steady stream of income from already live drugs on the market that are making big bucks. That's because both the larger size and diverse revenue based. The competition is more relevant and costly to pharmaceutical companies, creating a need for strong pipelines and non-organic revenue, such as mergers and acquisitions or alliances. And we just talked about that. The bigger companies will look at purchasing or merging with the smaller companies that are maybe more specialized to get a little piece of the action. Considering these issues can provide a basis for making a prudent investment. All right, so let's go ahead and look at some companies to kind of get an idea and start to create that watch list that we want to follow so that we potentially can get into the bottom level and ride the thing to the moon. Here are some of the pharmaceutical companies, and a lot of these, as you can see, are cheap, right? And, not necessarily cheap for a good reason, but they're cheap for a potential. And what happens is they run on news and speculation, and then the news or speculation fails or succeeds, and they either continue to just explode up or they come back down, right? So a lot of these have came back down, but that doesn't destroy their pipeline. Getting a failed test or something like that doesn't necessarily destroy the pharmaceutical companies, because they still got pipelines of successful ones. They just go back to the drawing board, and you can pick these up pretty cheap, and you can ride the next wave hoping that they tweak something to gain FDA approval for the next time. Here's the biotech and medical research, and look at some of these prices. We're talking cheap. I mean, you got some things that are legit penny stocks sitting there at 4 cents, 5 cents. And a lot of these are smaller firms looking for that breakout. And these are cheap. I mean, it would be nothing to go in and buy AWH, right, at 41 cents. Go in, buy 1,000 shares of that for about $400 and just see. And if this thing can create something that is disruptive and revolutionary, then that thing could potentially be $100 stock in the next 5 years. I mean, these things happen quick and they're booming stocks. But a lot of these will fail and they will just fall off the market because they're already cheap anyways. And all it takes is just one failure or someone to come in and scoop it up and be like, look, you had this thing, we still like it, we're going to buy it, put you underneath the umbrella, and then that stock goes away. So there is the risk, but look at that reward for these cheap stocks that just have the potential. And then again, here's that pharmaceutical and medical research. You'll notice some of these are overlapping in the names because they have what we talked about earlier. They're kind of double dipping in both sectors. But again, a lot of cheap ones, and you see a lot of other ones. One of those that I can think of right now is KALA, right? This thing, if you look back at it not too long ago, you can see this right here. Look, it was $3.54, got some news. Boom, shot up. Look at that, man. Like $53 explosion. And then that news subsides, drops big time back down, around the $10, even lower area. And now we got another push that this thing is trending again with some news that involved in their pipeline. And we're up again. Boom, just out of nowhere, another $7. All right, team, so that's the video. That's all I got for you. I just wanted to touch base on the biotech and the pharmaceutical area. I love trading these areas. I mean, the things are just cheap, and they're great opportunities to make some killer money, as you just saw with KALA. I mean, these things explode, and you can catch these, and they move very quickly. But you got to be able to take profits, too, because as quick as they go, they'll come back just as fast. Don't forget about our March Madness discount. Ends tonight, our All Access 50% discount. So definitely take advantage of this. You can get stocks, options, future, Forex, crypto, and even sports betting. You can read what we have there, but we have over 35 real-time analysts, multiple live trading channels open every day, multiple algo trades, pro trading chat floor, data quant, alert bots, TA bots, DD bots, chart bots, trading learning center, watch list, and so much more, guys. The link to join up is in the description, and I'll put it in the very first comment on the YouTube video as well. Quit wasting money that's not making money. Make the market bend the knee, and join the bulls at TWR and come trade with me. Let's go to war. Make the market bend the knee in 2023. Join TWR and bow to no one. The link is in the description or on the website at traderswarroom.com. Let's go to war.